All right, guys, this is a workflow breakdown. I wanted to show you guys a real trader on a live account, what's possible and what we look for as far as placing a trade, maintaining that order, parameters, and just overall workflow. $4.8 thousand was deposited on March 24th, 2020. Today is March 29th, Sunday. Market has not opened yet, but that is only 5 days total. So you can see the first couple trades that we took on US 30 didn't turn out the greatest, but it's not how you start, it's how you finish. From there, we picked up momentum, we caught Euro USD buy, and honestly, those two positions really jump-started the account with a 3.6 gain and a 5.5 gain. So as you can see, the 4.9 thousand and just last week alone profited $12,695. Now, what you can also see is we are currently floating $46,000. Now, let's go over what we honestly did to understand workflow, our entries, and how we were able to maximize this trade. So just taking a look, we always look at structure. So we could see price was in a downtrend. This was the floor. We have all these wicks. Price is clearly respecting this as a level of support. And then finally, we take a plunge where support is broken, then to push back and find a little bit more support after we had broken our first level of resistance. So the whole way down, we're seeing price drop, and then eventually, as it creates a level of resistance, that level of resistance breaks. We then get an assertive push all the way to the upside, in which this final level of resistance was broken. We now have an indication that we are looking to have more buyers in the market than sellers. We also, from our patterns, can see that this is an inverted head and shoulders. Here we have our left shoulder, we have our head, and we have our right shoulder. So as that first push of bullish momentum was created, we now know that we are looking for buys on these levels of retracement. Now, I'm big on price action, I'm big on structure swap. So as you can see here, this was our level of resistance, where this wick touched, where this wick touched, and where this wick touched. We had a pretty clear-cut level of resistance. Once that level of resistance had broke, we get a break and a retest. Now, once again, guys, this is hour 4, so we're always going to be bumping through the different time frames. M30 is absolutely imperative for you to be able to see how price is reacting on a lower time frame, and you can also apply your technicals here as well. Now, you can see the first couple buys that we got was after we had already seen price reject this level of support. Now, when we got our bullish impulse and we're starting to see all these wicks, every time price tries to break this level of support, it immediately rejects. Then this is around the area after I had seen this bullish closure on the M30. That's when I waited for a pullback and I said, you know what, I think this is finally time for the momentum to occur, because on the higher time frames, what are we seeing on hour 4? Right? We're seeing all this level of exhaustion, and we know that this is a clear-cut structure swap point. After it inverts head and shoulders, we're looking to catch that next movement of bullish momentum. Let's bump back down to M30 time frame. This is where we get our first couple of entries. Our stop loss for our first couple trades is below all of the wicks. So you can see 131.18 to 130.52. That's about 70 pips for stop loss. Now, once again, you don't have to be consistent with the amount of pips that you're willing to risk. I think it comes more down to your trading style, you deciding how much you want to risk on any given trade, and then actually picking a stop loss that you feel like is in a good position. Usually, most people will only risk 50 pips. In this situation, I felt like the trade needed more than 50 pips to stay clear of where we had been seeing all of our levels of bearish exhaustion. So once I had entered this first trade and I seen this M30 candle close bullish, I got in on the wicks, and then we had seen this back-to-back M30 candles bullish. This is all phenomenal. This is what you want to see. We also had a break of our trend line. that I had when I first entered. And as you can see, once we get that break and close with a sexy candle off the trend line right here, you have a very good indication that price is going to continue on up. Now it did continue up, and now this gives us opportunities to look for scale in orders. So after price had created a new high around 133.79, now we're looking for more opportunities to try to get in again. Now, after I had seen price come down here and reject 132.41, which is also once again a structure swap zone, this was our high. Our high broke the trend line, created a new high, and then came back down here and retested this zone. I then wanted to get another confirmation to see it retest again. After I seen this M30 candle closure with indecision, I know to expect a potential bullish variation based off it being on the trend line. So I did enter on this wick after an M30 closure because I had seen price was not wanting to break this zone, which allowed me to actually create somewhat of a trend line. Now you can see on the hour 4, this trend line looks a lot better, but M30 is where I had been drawing my technicals because I was looking for entries on lower time frames. So this is the first scale in that I got. And then after I had seen price break my mini triangle, then I was waiting for the retest. Now, after the retest, this is actually right where I got my first buy. Was after price had broke. Price broke, retested, and I seen a bullish variation. This is where I had got my first buy. I was immediately in profit, and then I saw some drawdown for it to come retest 132.70 one more time. Now, after I had seen this wick and a bullish variation with the M30 candle close, and then another M30 candle close over 133.45, I knew then we would go look for new highs. Now, currently, it's 4:26 on Sunday, and market is going to open in about 30 minutes. So we'll have a better idea of where price is actually going to head. I have my take profit set at 138 for every single position. So once again, guys, this account started at 4.8 thousand on Tuesday. It's now Sunday. We have 17,600 cleared in our balance, and we have 64,000 in equity currently floating. Now, the reason our stop loss is set at 133 because when it comes to managing orders, you also have to remember the ability to leverage in and also understand worst case scenario, best case scenario. So we have phenomenal entries around this area, which then allowed us to maintain our stop loss and profit the whole way. So then when we scaled in, our stop loss was the same as our stop loss and profit. Now, what's important about scaling in is to not use a position bigger than what you already had down here. Let's say we had our first entry down here at a 1 lot and you scale in with a 3 lot. You need to be careful that the amount of the 3 lot dropping doesn't wipe out your very good first trade. So that's why when I used the 2 lot, we were already 10 lots in. And then as I added 7 more lots, I still knew at the end of the day, we're not using more than what we first scaled in with. So after we got this 4-hour close and I seen price pushing up and closing the way that it did before markets closed on Friday, I said to myself, worst case scenario, we put our stop loss at 133 flat, which is the wick of the last H4 candle. And we clear this account at about 30,000, 40,000. That's worst case scenario. Best case scenario, price goes all the way to 138, way up there, and we clear about 120,000, a little over 100,000 to 120,000. So at this point, it's completely risk-free. I will not be scaling and adding any positions, and we'll just let the trade play out and take its course.